Real life traders, this is Brad Reed. I am a real life trader and I'm here to remind you to be good. By good, I mean get out of debt, achieve your financial dreams, and give generously to your community. And one way to do that is to hire a financial advisor. Loren Olson of Retirement Resources Inc. has joined the webinar. Loren has a significant portion of my family's retirement money. And although I do trade, Lauren's got a portion of our retirement that has been allocated for our retirement needs. And then I am trading for our retirement wants and dreams. So there's no plan on taking the money back over from Lauren. But I know some folks here in real life trading are just learning how to trade. And one thing that you might want to do is consider uh, giving your retirement money over to a financial advisor like Loren who can grow your funds while you are still learning how to trade. And then once you are consistently and reliably profitable, then you can consider starting to take the money back. But Loren has a very unique method of trading. It gives him buy and sell signals. And if the market's going down, Loren's got a very unique way to go and find what funds may be going up. And as of that, I'll turn it over to you, Loren, and thanks for being here.
Okay, well, thanks for having me, Brad. And I don't know if Brad had indicated my company is Retirement Resources. I am a registered investment advisory firm, so we're really a fee-based only advisory firm. And what our methodology is we look for narrow sectors of the market. We monitor the performance of those sectors. And we're looking at things like biotech, healthcare, semiconductors, technology, et cetera. And again, the idea is to simply own the top performing sectors within those sectors. So how do we accomplish this? I use a company called Dorsey Wright and Associates, and Dorsey Wright is a firm that has been providing data to Wall Street firms and advisory firms for about 30 years. And the premise with Dorsey Wright is they do what are called relative strength calculations, and this is what we're interested in. In other words, how is one stock performing relative to another stock? How is one fund or one sector performing relative to another sector? Tom Dorsey started the company again about 30 years ago, and they come up with a formula where they can calculate. It's a very simple formula. Again, how one fund or one stock is performing relative to another. So as an example, if I want to look at biotech and banks, I just go to the Dorsey Wright website and I just put a ticker symbol in, and they come up with a formula, and they come back and they say, okay, biotech is currently outperforming banks. So that's what we should own. Now that's fairly simplistic, but it gets somewhat more complex if we've got about 40 sectors that we're monitoring. In other words, we need to know how biotechs are performing relative to banks, how they perform relative to the internet, semiconductors, et cetera. So what you really have are about 40 times 40 calculations, or about 1,600 calculations that are done on a daily basis. And this is all done on the Dorsey Wright website. What I do is I simply go onto the website and I create what's called a matrix. And once the matrix is created, each night, Dorsey Wright went and they'll do their computers will do their thing, make the calculations, and then I'll just get up the next day and I'll look at the rankings, etc. So if I assume everybody can see the screen, this is the matrix. This is what it looks like. And so you can see dark green, light green, red, B's, X's, O's. All of these mean something. And but what we're really looking for are the ticker symbol. These are the sectors, and you can see the top performing sector right now is Japan. And they're ranked based on buys. Once again, this is not saying that Japan, you should be buying Japan. The important thing is that Japan has 40 buy signals relative to the other 40 sectors within the matrix. So that's the key behind the performance. The next column that we look at are X's. And we think of X's as really just, you kind of think of X's as momentum. In other words, we're going to be looking at X's and O's. And if Japan has 38 X's, it just simply means that the momentum is still there. It's still outperforming 38 of the other sectors within the matrix. So if I come over and if I look at where's one of the O's, Japan's on a buy signal, but it's in O's compared to banks. Now that's important for me to understand that, because if I come down and if I look at banks, banks in terms of buy signals are ranked number 22. Okay, and so if all I'm doing is looking at the buy signals, I wouldn't even be paying attention to banks. But I want to be able to see, okay, what are some of these funds, these sectors towards the bottom that are starting to move up, and want to catch those probably before they even move into the top 10. So I can arrange this by the number of X's, and you can see that banks, in terms of X's, are ranked number 4. Okay. Very important, and that's just simply telling me that the momentum is there, and I probably will be looking further, maybe next week, by the time I add banks to the portfolio. So the idea behind that is to not wait until it's got 35, 36, 37 buys, but to move in it when the momentum is there. And then the last couple of columns, the technical attribute score, is just something that simply confirms a combination of X's, buys, totals, etc. So the higher the score, the better, the higher quality those sectors are. So let's look at performance. And this is the key, because if we look at, and these are year-to-date performances, this is Japan, China, international, biotech. So we can see 8, 32, 18, 16, 15, 14%. So this is there's a big difference, substantial difference in terms of performance year to date as compared to the S&P 500. That's up 3.01%. Dorsey Wright has created a matrix. It's called a DWA 60/40. This is pretty much where your traditional investment money managers are going to the type of investing that they're going to do for their clients: 60% stocks, 40% bonds, etc. But that portfolio is up only 1.85% year to date. So big difference if we can monitor and own the top performing sectors. It just makes a huge difference in terms of performance. Now, I make the decision in terms of what I'm going to own, the percentage that I'm going to own in terms of these top performers, and I do keep some money in cash. I've been doing this for about 3 years now, and I've kept typically about 30% in cash, but over the past 3 years, our portfolios are up a little over 70%. And so I don't have any clients that are complaining. Clients are pleased. One of the things that there's always room for improvement. One of the things that we're working on is a formula of how to weight these portfolios. In other words, if we can develop a formula to weight more money in Japan and some of these top performing, then our overall performance will improve substantially. That was going to be Brad's job when he was in Kansas City, but he left. So I've got to find some other whiz kid to come in and help me do some of those things. Brad had indicated, I think he said something about my website. I do write a commentary. Write a commentary on Fridays. It's just very, very brief, informative. Brad gets it. He so far hasn't sent me anything to take him off of my mailing list. But if you want to receive a commentary from me, just go into the website, retirementresourcesinc.com, put in your name, email address, and we'll add you to the commentary.
Yeah, it's a really interesting
Brad, I think that's it.
commentary. It's. Can you hear me? There we go.
I can.
Yeah, the commentary is short, it's sweet, it's funny. Loren's a great writer, and I don't know. He gives me perspective that I had not been aware of, or either confirms perspective that I was watching. So doesn't hurt to go over there and check it out. It's only once a week, and it can definitely add to your market awareness. Loren, now you talked about some of the those funds that you're owning that are, in the 18s and 20s%, whereas the market's doing about 3% this year. What has been some of
Mhm.
your performance over the last couple of years?
Well, I started in 2012, about mid 2012, and for that 6 months, I was up 20%. 2013, we were up 35. Last year, we were up about 10%. This year, I think everybody's pretty much aware that the market, we've had some of these V-shaped market, this volatility. We've had probably more of those this year than we've had in the history of the market. And so none of these systems are really perfect. We can get a little whipsaw, but we're up about 7% for the year this year in spite of what's going on with the market. So, and that again is with us. That's with a substantial amount in cash, so I'm pleased. I'm pleased with our performance even this year, in spite of what's going on.
Yeah, I'm pleased as well.
With the mother market.
Loren really got my attention. It was it 2013? Yeah, 2013. Loren reported 35% growth versus the market did like a 28 or 29%. But Loren did that 35% with 40% in cash. So his actual invested side was more like 65, 63%. So, and Loren said he started this in mid 2012. He started this new system in 2012, but Loren's been an investment advisor for, I'm not going to say how long you've been an investment advisor for. You say it.
20 years.
Okay.
Years ago, I hired a guy. I had a guy that worked for me that did the calculations. We did Excel spreadsheet calculations, and so we did some of these same things ourselves in house, and it just got to where it was too much for us to do that. But Dorsey Wright, they're an excellent firm. They do all the calculations for us. So, and now all I have to do is wake up every morning and look at the matrix and see what's trending in and out of favor, and make those changes accordingly.
Okay.
Did I answer your question, Brad?
Yeah. Yes, it is. Yesterday, I attempted to explain point and figure charts. Now, I was about to say most. I'm gonna stretch out here and say all of the folks probably watching this video are candlestick traders, not point and figure. But if there's anyone on the webinar right now that wants to see a point and figure chart and hear Loren explain it, and Loren, before you switch, do you want to share your contact information, or we can do the point and figure chart and then come back to your contact information. Let's go ahead and look at one. I think it'd be interesting for folks to see what a point and figure chart looks like and how you interpret them.
Okay. Let's look at a couple of point and figure. If we go to banks, again, I'm looking at banks and I'm saying, okay, I'm watching it. But I just want to look at a point and figure of banks. And so we're not going to really do a relative strength, how banks are performing. So when we pull that up, this is a point and figure chart, okay? So X's, again, prices are moving up. O's, prices are moving down. So anywhere that you see a highlighted X, it means that banks are on a buy signal. Now, it doesn't mean that it's on a relative to the other funds. And again, that's key, and that's why I don't own banks right now. But it is on a buy signal. And this is an intermediate term scale. So what I'm also looking at is a short-term scale. And you can see that banks, the prices have been moving up, and on a short scale, they've been moving back down again. So really what I'm looking at is I'm waiting for a reversal for those prices to start moving back up again. I don't know if they're going to continue going down, if it's going to hold here and then move back up. Once those prices start to move back up, then I'll go in and buy banks. Okay? Now let's go back and let's look at banks just relative to consumer. Banks are on a sell signal, but they're in X's. Now, this is a point and figure chart, but we're looking at banks versus consumer goods. All right, so now we're back to relative strength. In other words, how are banks performing at a buy signal relative to consumer goods? And you can see that relative to consumer goods, this O means that it hit a sell signal, okay? But even though it hit a sell signal, it's now reversed, and the prices are now moving up at a higher rate than consumer goods. Okay, so that's important, and that's just simply saying that reversal has happened, and that's why we have the what did we have, 35 X's on banks. So that's how we can look at point and figure just based on banks themselves, and then based on the other sectors. So I guess you need to keep in mind that if we're in a bull market, we may have 25 or 30 of our sectors if we just go and look at all those that are on a buy signal. Okay, now that's fine. Yeah, but what's more important is that I want to know what's on a buy signal relative to the other sectors. And that's the key to getting the performance that we're getting. And once again, all of this is provided by Dorsey Wright. They do all the calculations, and again, I make the decisions. I create the matrix. So if I wanted to add a particular stock or a fund to that matrix, then I can do that. If a client has a group of 20 different stocks, and they say, okay, these are the stocks that I like, which stock should we own? Well, we can put those ticker symbols. I can create a matrix for a client, put the ticker symbols in, then come back with the same thing that I'm showing in terms of the matrix.
Hey, Loren, Pat Kaufman is asking you a question.
Mm-hmm.
She says, how will you protect your investors from a large market downturn? Do you hedge the portfolio with SPY puts, or how do you hedge from a large market downturn?
Well, let me try to pull something up. Dorsey Wright also has they monitor 6 broad asset classes. And so we want to start with, okay, it's kind of like hunting or digging for gold. And so the 6 broad asset classes that they monitor are U.S. stocks, foreign stocks, fixed income bonds, precious metals, cash, and currencies. Okay, so about mid 2008, U.S. of course, obviously U.S. stocks are the number one broad asset class right now. So again, that's just telling us we need to focus our investments in U.S. equities. About mid 2008, Dorsey Wright, U.S. equities moved to the bottom, and so in fixed income, some currencies, commodities, etc., moved to the top. So we're not going to get out of the top, but it was just simply telling us that we need to move from U.S. equities. And if we were doing that, then we would have missed the majority of that downturn. Now, I also have another matrix, and this may answer her in terms of performance. But this is a matrix pro funds with shorts, and right now I'm not concerned with shorts because we're not trading on a short-term basis. But if we go into a 2008, then I'm going to pull this matrix up, if it will pull up.
It's taken a long time because I'm recording. It always happens to me too.
Okay, here it is. Okay, so these are okay. Ultra short Japan, short China, international, short Nasdaq, short emerging markets, bear fund. That really shorts the S&P 500. So we have those available, and so what would happen is that in a 2008, these short funds are they're gonna be at the top, and we're going to be looking at the number of buys in those particular areas, X's, technical attribute scores, etc. So I hope that answers her question. We do have a methodology that starts very, very broad in terms of where we need to start looking. And then once we understand, where we're starting to dig, then we dig down further from there.
Cool. So, Loren,
Cool.
would it be an accurate way to say that your system on what you're currently holding, when the market starts to roll over, you'll be generating sell signals, and then you'll go look for asset classes that are generating buy signals. And if the market truly
Mm-hmm.
is tanking, like all of the fear mongers are say it's going to, I guess they've all been saying for what, about 2 or 3 years that the market's going to tank any day now. But
Mm-hmm.
when it does, you'll get signals to sell what you currently own, and then you'll go look for buy signals in the various asset classes, and then you'll zoom in on what specific funds within those asset classes.
Exactly. And we like to think that, and Brad, I think you had indicated this when you were first, when you were introducing me, is that we're always looking for something that's performing. And so, if in fact we've got bonds in 2008, bonds actually did well. So within that matrix that that I'm monitoring right now, bonds are in that matrix. They just happen to be, I believe, number 41 out of 41 sectors. And but at some point in time, once again in the 2008 environment, those bonds are going to come to the top, and we'll be owning those. I want to show one additional. These are indicators that Dorsey Wright this is the New York Stock Exchange bullish percent, and this is just telling us, you guys look at stochastics overbought, oversold conditions.
Correct.
This is similar to that, and so you can see. I want to show a short-term indicator of last year. See, this is the year 2015, this is 2014. Remember last year when the market nosedived, September, October? And so these were, this is, prices going down. And these are short-term indicators of the New York Stock Exchange. It's all stocks on the New York Stock Exchange. And about October, I had a client that said, we've got some elections coming up. There's too many things going on. We need to get out of the market. And I said, no, we don't. This thing is so oversold at this level of 16 that it had nowhere else to go but up. And and you can see shortly after that that the market took off. And I think we had, in about, I think within 30 days, 45 days, we were up about 17% on our portfolio.
Loren, Pat has another question. She's asking, what kinds of changes in your portfolio do you anticipate making if the Fed raises interest rates? Will you have to get out of bonds and into something else? And currently, I don't think you're in bonds, right? Bonds are just on your matrix, but at the bottom of your matrix, but you're not in them. But what changes would you make? Do you anticipate making if Fed rates go up?
Well, if interest rates go up, it's going to have it's probably going to have a temporary impact on because the traders tend to react to that type of news. And so sometimes we just have to say, all right, that's a reaction. That's let's figure that maybe inflation is on the horizon, et cetera, et cetera. So some of those things we just have to be patient, ride through it, because it's just a reaction to the market. But if interest rates go up, I don't anticipate them going up very high, for one thing. I don't want an environment where we've got a tremendous amount of new technologies that are being produced. And the greater the technology, the lower the prices, et cetera. So I think we've got an environment long term that's got some room to grow. Am I answering her question?
I believe so. Yeah. She says,
So
thank you, Loren.
okay,
So Loren, how would someone contact you? I typed your email address in here.
I would
I'll type it in again.
if you want to call, my phone number is 913-387-0117. Your call, and you're free to chat with any questions you may have. Or you can send me an email, Olson, Olson, at retirementresourcesinc.com. And go to my website, sign up for the commentary, and then that way you'll receive something from me on Fridays, and you can always respond to that particular commentary.
And your website is retirementresourcesinc.com, correct?
Yes, yes.
I've got it bookmarked, so I just clicked the bookmark. Okay, any last questions for Loren? Go ahead and type them in. And otherwise, I'm just going to say, Loren, thanks for coming and sharing your systems with us. You do have a quite a bit different system than us, but we're all looking for buy and sell signals, and we, of course, we're all concerned about how to protect ourselves when the market does go down, because we know it is going to. Not sure if it's going to be tomorrow or next year, but after studying Loren's system next to him, I was convinced that he'll get out of the funds that are going down, and he'll find the funds that are going up, and that's why he has a significant chunk of my family's retirement. I think you've answered all the questions, Loren, so I'm going to say thanks for joining us, and have a great day out there in Kansas City.
Good.
And to everyone else on the recording, for more videos like this, go to www.reallifetrading.com, and as always, trade on logic, not on hope. Thank you, everyone.